Hey everybody, welcome to the Successfully Unemployed Show. My name is Dustin Heiner, and I'm here to help you learn how to quit that JOB, that just overbroke job, by investing, by having a side hustle, by helping other people get out of their properties as well. And today I'm super pumped to share with you a way to help people who are in a bind and have a problem and provide for yourself as well as your family because you have a business that makes money for you. Today I have a super awesome expert that shows us how we can actually do subject to deals, which we'll get into that in a minute because you might not know what that means. But I have William Tingle on the show. William, thank you so much for being here.
Well, thanks, Dustin. Man, I'm honored you're having me on your show and just proud to be here today and share with your listeners.
Now, subject to is something that's really, really interesting, meaning, well, actually, let me have you. What does subject to deals look like? Now, we're talking about real estate investing
Right.
and taking ownership of properties, but what is subject to deals?
Well, subject to really just very simply is just taking over existing financing that's already on property. In other words, Dustin, let's say you call me today from some of my marketing, a bandit sign or a postcard I mailed you or something, and you say, listen, I've got a house I really need to sell. And, I'm moving across the country. I've got 2 weeks to get there. I just bought this house last year. I don't have any equity. I can't afford to sell it with a realtor. What can I do? Can you buy my house? Well, Dustin, we might have a way we can buy your house. Are you willing to, let us make the payments for you until we can find a buyer? Well, yeah, that'd be great. Okay. Well, that's what we do. We sign a contract, go to a regular closing like any other deal. We don't formally assume it. We just take your payment book and start sending in those coupons with payments every month. And that's what we do.
I love that. Now, do you take ownership? Like, do you put the title in your name or your company's name?
Absolutely. We get full ownership, all rights of ownership. You deed us the property, you hand us the payment book or give us your login information for your online banking for the lender. And we just start making the payments every month. The loan stays in your name, but the house goes in our name.
That is terrific. Now, there's so many things we can talk about. Everything from a lot of with me coaching students, I get this question all the time. You get this question all the time. What about the do on sell clause? And we can get in that and get worried about that. But with that, how do we then use this to make money to provide for ourselves and our family? If we take over somebody's payments, and then that's money coming out of our pocket, hopefully we can do something with that property. But walk me through the entire process to where we can start making money from the subject to deals.
Well, it depends on what you want to do. If I buy a house subject to because someone's in distress and they give me a house with equity, well, I can retail that house and sell it to, if it needs work, a rehabber. If it's in pretty good shape, I can list it with an agent just like they could have done. But who knows why people don't take that action? They just don't. If it has equity, we can retail it, we can flip it. If it doesn't have equity, but the payments allow for cash flow, just like you could go out right now and pay full price for houses. People have been doing it every day and turn around and use them as a rental property. Well, you can do that with a sub two property as well. Airbnbs, gosh, people are taking over luxury homes everywhere, using them for Airbnbs. But our favorite method is to take over payments on a house with 2.5%. 3% interest rate mortgage and resell that house with seller financing at 6, 7, 8, 9%. Gosh, and that's going to be an interesting part of this show later. We're going to talk about the rising interest rates. But wrap that property and get cash up front in the form of a down payment, cash every month in the form of cash flow, and then a back end payday 2, 3, 4, 5 years down the road when they refinance. So
That's great. That sounds like a fantastic, like all those things. There's so many great things in there. Now, how did you get started into doing this real estate investing, and especially the subject to?
well, my story is like a lot of other people. I worked in the restaurant industry. I'd done that for 20 years. And I was just sick and tired of working 60, 70 hours a week and barely paying the bills. One night I was watching late night TV and a Carlton Sheets infomercial came
The
on.
same here. I did the exact same thing.
Right. And so I ordered the course. And I'll tell you the difference between us, you and me, and what most people do when they order the course. We opened it and read it. Okay, big difference there. So I took the information and just started buying houses. And I looked up a couple of months later and I bought 4 houses. And I said, wow, this stuff might really work. And then from there, you expand your education, you find other teachers and learn more techniques. And that's actually how I got into sub two.
With that, I mean, carton sheets hasn't been around, or at least you don't see them very much now. But how long ago was that? And then in this market now, let's definitely start talking about this market now. So, how long ago was it? And then you've seen a lot going through in your investing in the market now. Are you excited? Are you worried about what's going to be happening with the market?
I bought my first house in 1999, so that was 23 years ago. That's a lifetime. Most of these new investors, they don't know anything about downturns and things like that. But we are so excited. In fact, that's something I've been talking to some of these guys about all day already today. Is the interest rates just went up again yesterday? To get an A plus borrower is going to be paying 8% for a mortgage here in the next few weeks. But there's still a ton of mortgages out there in the 2, 3, 4% range. And more foreclosures are coming on the market. I talked to a guy this morning that was at a big event out in Texas, and he's telling me information that hasn't even been released yet. He said there are 3 million mortgages in default right now and more coming, because what's going to happen in January after Christmas. There are going to be a lot of layoffs. Our economy's terrible right now. There are going to be a lot of people in trouble, and it's going to be so much opportunity for investors to make money while they help people that are in distress and in trouble.
I have been saying this for a while that I'm waiting. Like, I'm excited for interest rates to go up because that changes the dynamic of how. Now, don't get me wrong. I love when prices or homes are going up. Appreciation's great, but I invest for generational wealth. I buy and hold properties, and so I'll give these properties to my kids. But with that, when these cycles, there's a way to invest in every single cycle, whether the market goes up, down, or sideways. You just got to figure it out. And a good way, a fantastic way, is doing subject to deals, because you could even get into a property with no money down. So, can you walk us through a process of one property? Well, actually, let's before we jump into that, because we need to find these properties. Like, we need to source these properties where we can actually do the subject to. How do we go about? Do we knock on doors? Do we send out yellow letters? What are your thoughts there?
You can do any of it, Dustin. As you probably already know, any technique pretty much will work if you do it. That's the thing. People go, oh, yeah, I mailed out 100 letters and I didn't get anything. Okay, well, how many times did you mail out those letters? It takes some consistency. It doesn't matter whether you use bandit signs, texting, the modern stuff. Now, when I got started, we didn't have texting. We barely had cell phones. So we mailed letters, we knocked on doors, we did those things, and all those things work. We're in a new market right now. We just landed in Arkansas, and we're not knocking on doors every day. We're on the radio. We started our radio ads this week. We're doing all kind of stuff. We're going to talk to a lady this afternoon that's in foreclosure. She's 5 days from the auction. She's getting all her stuff together, ready to have a yard sale. I mean, she's moving out of the house. So, finding people, look for people first in trouble. They've got problems. They've got due dates. Foreclosure, people that are getting transferred, VA loans, if you like to do mailings. People in the military buy a house. They put nothing down because they're getting a VA loan, and then they get transferred a year later. What do? They don't have the money to pay a realtor, so they usually wind up renting the house out if they can't sell it. Those are people that'll sell to you subject to. So anything really works, whether it's direct mail, bandit signs, texting, knocking on doors, all of it works. Just pick something you're comfortable with and do it on a consistent basis.
What are some problems with subject to? Because the immediate problem everybody always thinks of, well, and this is how I do it, because I coach rental properties, how to buy and hold properties. And we eventually try to get it moved into our LLC. And moving it from our name to our LLC, if it has a mortgage on it, they always come up with the idea or the thought, because there's a due on sale clause. Because most mortgages back in the 80s and 90s, you could actually assign that mortgage over to anybody else. You could do that. Now it's expressly like they don't want you to be able to do that. With that, what are some problems, and is a due on sale clause an actual problem that we should be concerned about?
I do a podcast, as you know, and a couple of years ago, I just put out a call everywhere, my email list, social media. I said, if you've had a due on sale issue in a subject to, please let me know. I want to have you on the show. And I tried for weeks to get someone on. I finally found a guy who actually had it happen to him and had him on the show. But there were a couple of key factors in that. It was a small local bank. So that's a flag. That can be a flag. They keep the loans in their portfolio. They're well aware of what's going on. But that was the big thing. I've been doing this for 23 years. I've taken hundreds and hundreds of properties subject to from just about every bank you can think of, all the big banks. And I've never, ever had a due on sale issue. if you're going to have a due on sale issue, it's probably going to come down to one of two things. Number one, you're not making the payments like you're supposed to. Don't bring attention to that loan. And number two is just handling insurance properly. Properly insure your property. If I buy from a homeowner today, they've got a standard homeowners insurance policy with their name as the primary loss payee. They've also got the bank listed as a lien holder. When I'm going to transfer that insurance into a non-owner occupied insurance policy, and of course the lender's going to get notification of that, I'm going to list my trust because I use a trust to hold property. My trustee will be the primary loss payee. So the person at the lender's office getting that paperwork might go, hey, wait, where's John's name? He's not on here. But what we do is we list our seller's name as an additional insured on the policy. That way it doesn't raise any flags with the lender. And we get a power of attorney from our seller so we can sign any insurance checks that may come from a claim. Do that right, your chances of having a due on sale issue are very, very low.
Banks don't want properties, they want money. And so that's the biggest thing I always tell people. And I'll be completely honest, same just like you. I have asked countless investors, my students, like nobody, I have literally not come across anybody that has had that issue where it actually came, where the bank said, then the due on sale clause, the bank says, I want the property back, or you pay us in full, or we're taking the property from you. What they really want and care about is the money. They want their money. If you keep paying that mortgage, they don't care. Now, what they have done, or what they probably would do is just say, put it back in the original form where it's at, or give us all the money. But anyways, there's so many ways to mitigate that, and biggest one is just keep making the mortgage payment. Don't draw attention, like you said. Now, with that, it seems like we need contracts. Because that's the thing. People are like, well, how do I actually make the right contract? How do I make sure that it actually gets recorded properly? How do I make sure we find the right title company that knows how to do this sort of stuff? So in the paperwork, what contracts and what things do we need there?
Other than disclosures, there aren't many things that are different in a sub-2 purchase. And you can close a sub-2 purchase at a title company or attorney's office, just like anybody else. There will be a HUD form involved, or an ALTA, whatever your state uses, a deed, of course. We get a few extra documents because it is a little bit of an unusual transaction. It's not the norm. So we make sure our seller understands the loan's going to stay in their name. It may impact their borrowing for the next few years. Possible. We don't know. We don't know what their credit's like or if they're going to pay their bills in the future. So we can't guarantee anything there. And there's no special contract, Dustin. You can use your state's board of realtors contract if you want to. You just want to add either an addendum or a clause that addresses what you're doing. In other words, you might add something like this sale involves taking over existing financing with a loan number, whatever the loan number is, with whatever bank it is, and the payments will start on such and such a day. This loan will stay in the seller's name until the buyer pays it off completely. As long as that's added and addressed in the contract, everything else is normal. And I'll tell people this too, if someone tells you, an attorney, an agent, whoever, sub-2 is illegal, just have them look closely at a HUD, lines 203 and 503, that say existing loans taken subject to. It's right there on the HUD already.
That's great. I love that, because you could point out and say, yeah, because they don't really, attorneys and maybe even accountants, like they don't know everything. And so we have to also educate them as well, especially title companies too. Like hopefully they've come across it, but at the same time, not all of them have. Now, with the subject to, how do we then transition that? Because the mortgage is in the seller's name, but basically the homeowner that you're now taking over this mortgage. Now, let's say I want to keep it as a rental property, but I want to put a mortgage on it myself. Like I want to get them out of it. I want to put myself on it. So eventually get it refinanced and put it in my own personal name or in my company's name. How do we go about doing that? Do we have to go through another process? Is it easier just having one bank pay out the other bank? How do we do that?
It's just like you would refinance any other. If your lender wants seasoning, they want to see that you've been on title X amount of time. If they don't, they'll refinance you right away. Once you get the deed in your name or your company's name, you own that property and you can do whatever you want with it. Refinance it, sell it, rent it out, live in it. Doesn't make any difference.
So they would just look at it, the first new bank that you're trying to get financing for, you'll say, okay, the first lien holder, we got to pay them off. And they'll just pay them off. Okay, got it. Just like a normal refinance. So let's just say you bought it with cash. It was your own cash and you wanted to refinance it. Then you say, okay, well, I want my cash back, do the refinance. Or if you have a mortgage on it already, then you're going to refinance it. They're going to pay off the other bank. That's terrific. Now, what other issues can we come up with? Like, do you have any like specific problems that any of your students have come across, or anybody on your podcast has said, this has been a problem, coach me through this?
Right. No. I mean, the due on sale is always a big question. The biggest problem, I guess, most investors have, or number one, is going to be finding an attorney or a title company that understands what you're doing and is okay with it. If you're closing with a title company, you'll run into a lot of them that won't handle a sub-2 transaction. They don't understand it. Some of them think it's illegal, even though it's right there on the forms they use every day. So you'll have to either educate them or find someone that'll work with you. That's a big obstacle you can run into. Otherwise, it's finding sellers that understand what's going on. When you say, hey, I can make the payments for you. Well, how does that work? Do we have to call the bank? No, we don't. All we have to do is go to a closing and we'll start making the payments. So that can be a little bit challenging, learning how to explain that properly. But otherwise, it's just a buy or a sale as any other.
That's great. So can you do this without putting any money down, or do they usually require like the seller say, I want money, or how do you make sure that the seller is satisfied in this transaction?
It's really simple. Ask the seller what they need. It's just that simple. You'll run into a seller that just bought a house 6 months ago and has zero equity, and they'll tell you in the conversation, get the story. What's going on? Tell me about your house. Why do you want to sell this house? Well, we just bought it last year, but we're getting a divorce. Okay. So what do you need from all this? I just want that payment gone. Okay. Question answered right there. We can make the payments on your house. You will have an occasional seller that'll write you a check to take their house. Let's take a seller that just bought last year and they called an agent. They need to sell. The agent says, okay, well, by the time we pay cost to sell, you're going to need to write me a check for $19,000. Okay. Well, the seller says, well, I don't have that. And then they start calling around looking for other options. They call you as an investor. Maybe they saw your bandit sign and they tell you the story and you go, well, I'll tell you what, Joe, I can take your house and you only have to write me a check for $5,000. Okay, that's a good deal. So, that'll happen. Not very often, but occasionally. But I guess the short answer to your question, absolutely, you can buy with nothing down.
I love that. And you hit the nail on the head, is helping the seller, figuring out what they want, asking questions, and seeing what they need. If they need a little bit of cash up front so they can help them move, well, let's figure out how we can do that. So I always love when I'm working with sellers, actually anything in general, business and in life, you figure out how to help this person. If you can help them get what they need, then you're going to hopefully, most likely, get help in what you need. Is there anything else we might have missed? Any questions I should have asked?
I'll tell you, really taking action. We covered that for a second about the Carlton Sheets course. That's the biggest thing you can do. Find something you're comfortable with for lead generation. Start having conversations with sellers, and you'll buy houses. It's just a matter of doing something on a consistent basis. But sub-2, it's just another method to buy. It's not complicated. It's just like anything else. Learn how to do it, and then just go do it.
That's great. Man, this has been it's a brilliant way, but not many people. In fact, I thought back in like the 90s, the subject 2 was done because of the due on sale clause and everything when I first got started. But this is fantastic. Hopefully people are going to be able to take advantage of it. Now, William, how can people find you? How can they reach out to you and hopefully work with you?
Yeah, well, there's a couple of ways. Number one, we have just a ton of resources and help for you to get started at sub2university.com. That's SUB, the number 2, university.com. And then sub2deals.com also has a ton of articles and training guides and things like that to help you out. But the best thing I think everybody can do right away is just subscribe to our YouTube channel at sub2tv.com, SUB, the number 2, TV.com. We release videos every day on subject to and just all types of creative finance.
That's great. William, thanks a lot so much. Hopefully people are realizing that coming up is going to be the best time ever to invest in real estate. And this is just another tool in our pockets tool belt that we can actually invest in real estate. So William, thank you so much for being on the show, man.
Well, thanks for having me. I appreciate it.